Hey guys, and welcome to the Working Money channel. So the world is waking up to the fact that bank deposits is an unsecured loan to a levered counterparty, that the FDIC insurance fund only has $128 billion, that total deposits in US commercial banks are the equivalent to 17.6 trillion. To me, that math doesn't add up. And here's the big one, that money itself is the confidence game, always has been. Guys, what Caitlin Long is bringing up here is in fact the storm that we are likely going to be facing within the next, some are saying as soon as a week, 2 weeks. Fractional reserve banking has always been a charade, says Mr. Use Case here. Jeff Booth says, agreed, Caitlin. But I would say slowly waking up to this fact, believing they're safe while they're still playing a shell game and not realizing how Bitcoin can protect them from it. Now, I would even extend that not just to Bitcoin, but other cryptocurrencies, namely the ones that solve problems. And I mean, the Three Stooges were warning about this back 80, 90 years ago.
How about the $20 you owe me?
Oh, yeah? Well, I only got 10, so here's 10 and I owe you 10.
Thanks. Hey, Mo, you owe me 20.
Well, here's 10 and I'll owe you 10.
You owe me 20.
Here's 10, I owe you 10.
Here's the 10 I owe you.
Here's the 10 I owe you.
Here's the 10 I owe you.
Good, now we're all even.
It still holds up. I love the Three Stooges. Now, I don't know if I'm going to get dinged for a copyright thing. I feel like this is so old that it's probably free domain. Don't know. Well, I guess we'll see. And along those lines, Cryptomaniac 101 posted this on Twitter as well. A 136-year-old strategy with a 90% accuracy rate created by George Tritch in 1872. So, I mean, guys, in a lot of cases, these markets are not that mysterious. Here, he created this infographic. A are the years in which panics have occurred and will occur again. And guys, if you take a look up here, it is eerily accurate considering this was created in 1875. Down here, B, the years of good times, high prices, and time to sell stocks and value of all kinds. And over here, C, the years of hard times, low prices, and a good time to buy stocks, corner lots, goods, etc., and hold until the boom reaches the years of good times, then unload. So you guys can see this, and it does actually line up quite eerily. I mean, it's not pinpoint perfect. However, for example, years of good times, high prices, 2007, before the 2008 collapse. We did, of course, have panic before the dot-com bubble in 1999, and panic again before the beer flu in 2019. So guys, this is all cyclical. Take a look at this. A low time to buy, 2023. Of course, we know the stock market is down. Here's the DJI on the monthly. And we're in 2023 right now. The stock market, the DJI is down about 13%. I mean, not historical lows, although we are still at the beginning of 2023. Who knows what will happen, if this will form a double bottom pattern before we bounce back out of that in 2024. So I will leave this link. It's an interesting chart. I will leave this link in the description of the video, and you guys can take a look at it at your leisure and decide for yourself what you are going to invest in. Taking a look at Bitcoin right now, we've got Bitcoin up. Again, this is on the monthly. It's up to $28,200 per coin. The last 3 months have been looking very, very bullish, not just for Bitcoin, but for cryptocurrencies as a whole. We even have Scott Melker here. The Wolf of All Streets on Twitter. The bear market is officially over. Bitcoin made its first higher high, and it was printing 25,200 since the all-time high. Let's just take a look at Bitcoin again on the daily time frame, giving us a little bit more, a more indication of why he's saying we are now finally in a bull market, and it is a confirmed bull market, is because we are breaking through these highs. So if you guys could just take a look here, this was the first high that was formed. Boom, we retraced down here in March, and now we're actually making higher highs, guys, breaking through this high. And this is the first time we have seen this, because if you take a look throughout 2022, we have seen nothing but new lows, new lows, new lows, and then finally, boom, breakout into new highs. So he says that confirms a new bullish trend. Price can still go down, but that would be a new trend, not a continuation of the previous bear market. So congrats to everybody, because we have officially made it. And just to give you guys some reference from Scott Melker, who also did predict the end of the bear market in 2019, the bear market is officially over. BTC made its first higher high, 4,200 since all-time high. Now, this was from 2019, April 2nd, 2019. That confirms a new bullish trend. Price can still go down, but that would be a new trend, not a continuation of the previous bear market. Congrats, everyone. So basically, the exact same tweet from back in early April 2019. That would have brought us right in and around, where was that? Right in around here. New high in and around here. Here, let me just zoom in on that so you guys can see. So a new high in and around here. It would be this candlestick right here. Basically the exact same pattern that we are seeing today, right? Coming down, this was the bottom, and then coming back up, making that new high. Going back over to today, we are seeing that same pattern over here. So a new high. And Scott Melker letting us know that. Let me just bring up XRP real quickly here. XRP trading at 38.2. So, still trading sideways pretty much. We aren't seeing alts really move. Bitcoin's going to, generally be the first one to move and always has been in these trends. I mean, sometimes we'll see some type of correlation, although XRP right now is still trading sideways, even though we are seeing multiple crypto whales joining the XRP network, guys. I saw this from Tim here on Twitter. Take a look at this. Crypto analyst Ali Charts tweeted yesterday that approximately 50 Ripple XRP whales joined the Ripple network over the past month. Now, why this is important, I think, has to do with timing. That has to do with markets, and let me explain this to you. In a tweet, Ali referenced data from the blockchain analytics firm Sentiment, which showed that these XRP whales have purchased around 420 million XRP. With prices at the time of purchases, it is estimated that the total dollar value of purchases were around about $155.4 million. So we're seeing, so the bigger point here, whales are getting in. They're realizing, this is probably the last time that they're going to be able to purchase XRP at such low prices, considering what they're assuming is going to happen next. I mean, we've got this debt crisis, this banking crisis that's looming. The Kobesi letter here posting this. Many people are saying the crisis is over now that UBS is acquiring Credit Suisse. So I guess I should touch on this first. UBS agrees to buy Credit Suisse for more than $2 billion. Just an article to that point. UBS has agreed to buy Credit Suisse by increasing its offer by more than $2 billion, with Swiss authorities poised to change the country's laws to bypass a shareholder vote as they rush to announce a deal before Monday. Well, that is the first red flag. Bypass a shareholder vote. Obviously, they want this to go through. They do not want shareholders to have a say in this, which traditionally shareholders, usually do have a say. They do own part of the company. The all-share deal between Switzerland's two biggest banks is set to be announced as soon as Sunday evening and will be priced at a fraction of Credit Suisse's closing price on Friday, all but wiping out the target shareholders, 3 people with direct knowledge of the situation said. So, guys, what this is setting a dangerous precedent, cutting shareholders out altogether. And, this is happening right now. This is one example happening in Europe, in Switzerland, with UBS and Credit Suisse. And the Kobesi letter saying, the crisis is not over just because one of the largest banks in the world is acquired at a 50+% discount. There are still 186 plus US banks facing the same issue as SVB. So this week is going to be crucial. Now, one point here that I thought was interesting, considering Ripple and XRP does have the clarity in Europe. It's UBS that's deciding to buy this bank, and the professional profit hunter here posting this. So UBS is already partnered with Ripple and XRP, the bank that has just bought Credit Suisse and is now the world's biggest bank. So from 2016, guys, 7 leading banks join Ripple's global network, including Santander, UniCredit, UBS on that list, Reese Bank, CIBC, National Bank of Abu Dhabi, and ATB Financial are among the latest banks to join the Ripple network. And again, that was back from 2016. So now we're seeing UBS with this purchase. Who knows if we're going to see, some kind of XRP liquidity easy. I mean, I don't know the fundamentals of, this deal and what they're going to do with Credit Suisse if they do need to relieve some of that excess pressure. But I know liquidity is tied up, and liquidity is going to be king. So it is interesting to see that there is that partnership tied to Ripple and XRP. So going to be keeping an eye on that. We also have this, guys, from the Pomp podcast, Raoul Pal weighing in on the situation. Listen to this.
The reason they have to undertake QE is the banks, particularly these regional banks, smaller and medium-sized banks, have another big issue on their balance sheet, and that is they are the largest lenders to the commercial real estate market. Now, if we go back to when we first spoke at the beginning of the pandemic, at that point, we were all going to the office. I was in New York when I saw you because I was going to the office, and we had 60 odd people in our office at Real Vision. Now we've got 3 people in our office. We've downsized once, and we still only have 3 people in the office, and we can't get out of our damn lease. And everybody's got the same issue. Nobody's going back to the office. The world has changed. We can all work remotely. So we used to do interviews like this in person. Now we do them over Zoom. So then we've got massive amounts of commercial real estate that are basically empty. And the numbers are a bit weird because you also need to realize that empty office space that's registered is entirely empty. But actually, most people are trapped into leases where they've got 10% of their workforce going in. So as soon as those leases come up, people are going to tip those out too. So we've got a second bomb to hit these smaller banks, and that is this real estate market. And the real estate market is going to be illiquid, and chances are it's not going to get solved.
So something we should be considering, guys, the real estate market has not even hit yet. And Raoul Pal brings up a great point here, giving the example of, office space in New York City during the pandemic. And now that, even though people can go back to the office, many people aren't. And a lot of these people can't get out of their leases. So what's going to happen to this real estate once that bubble pops? We also have rising interest rates in, residential real estate and people's mortgages coming due. Even if they're on a fixed rate, what's going to happen if their mortgages due, in the next 3 months, 6 months, 1 year, whatever? Are they going to be able to afford their mortgages? We already have variable mortgage rates decimating people. So just something else that we should be paying attention to. Gold Telegraph here also mentioning this. This is the big news today, guys. The Bank of Canada, Bank of England, Bank of Japan, European Central Bank, the Federal Reserve, and Swiss National Bank have announced a joint liquidity operation. There's that word again, liquidity. Can we just get this week over with already? So here's what's happening. The Fed and other central banks try to head off the crisis by keeping dollars flowing. So the US dollar, guys, is the cornerstone to this deal. The US Federal Reserve and several other major central banks announced a coordinated effort Sunday night to boost the flow of US dollars through the global financial system with the aim of keeping credit flowing to households and businesses. The Bank of Canada, England, Bank of Japan, European Central Bank, Federal Reserve, and Swiss National Bank are today announcing a coordinated action to enhance the provision of liquidity via the standing US dollar liquidity swaps line arrangements. This is what they said. Sunday's statement came just hours after Swiss authorities orchestrated an emergency takeover of Credit Suisse. So, we've got a lot happening right now. Market turmoil triggered the second and third biggest bank failures in the US history earlier this month, and it's threatening to make it harder for people to borrow money, US Treasury Secretary Janet Yellen said last week. If banks are under stress, they might be reluctant to lend. We could see credit become much more expensive and less available. Christine Lagarde, president of the ECB, told reporters on Thursday that persistently elevated market tensions could further constrict credit conditions that were already tightening in response to rising interest rates. Swap lines are agreements between two central banks to exchange currency. So giving you guys some background on that. They allow the central bank to obtain foreign currency from a central bank that issues it and distribute it to commercial banks in their country. So, the liquidity is what is important for, at least for now, to keep propping up the system because Merlin Crypto Future Invest here, I think, sums it up real well. In other words, they are worried that the petrodollar, i.e. the USD, will collapse, and the only way to keep it propped up is printing money and sharing whatever money they all have until they let it free fall and collapse to make it look like it was someone else's fault. So again, just another attempt to keep this market rolling until they cannot any longer. So the beer flu or Putin, etc., convenient excuses. They'll be lucky to hold it up till about January of 2024. But observation tells me something could happen by November or December. They'll need to hybridize the system with digital assets and fiat like XRP, XLM, the liquidity providers. So speaking of XRP and XLM, these are the elephants in the room that can serve as these liquidity providers. I saw this from Jessica Whitaker here, also posting this, the official statement that I just read you guys from the European Central Bank's website specifically. I welcome the swift action and the decisions taken by the Swiss authorities. They are instrumental for restoring orderly market conditions and ensuring financial stability. So this has to do with Credit Suisse. The euro area banking sector is resilient with strong capital and liquidity positions. There's that word again. In any case, our policy toolkit is fully equipped to provide liquidity support to the euro area financial system if needed and to preserve the smooth transition of monetary policy. Now, we know the ECB has a strong link to Ripple and XRP. We also know the World Bank has gone on the record and explained in this document, laid it out for us, that they consider XRP and XLM as stable coins. They put it in a paper here, stable coins for cross-border payments. Now, I did a video on this, and I mean, this was a bombshell release. Many people were thinking to themselves, how could they consider XRP and XLM stable coins if they are clearly not stable? They clearly have market value. We were speculating, of course, based on what David Schwartz has said in the past, that XRP has to be at a high price in order to fulfill what it was destined for. And so, we were thinking to ourselves, okay, so what is going to be that high price? Obviously, that high price has to be stable. David Schwartz also made comments about how the volatility would likely subside once it did reach a high enough price. So, taking that into consideration, I wanted to show you guys this clip here from Lynette Zhang. ITM Trading, listen to this.
The IMF in 1969 created their own currency called the SDR. It stands for special drawing rights, but it's just a name, just like the dollar is a name. Just a name. However, what that is it is a basket of currencies. At the moment, there are 5 currencies in there, but in reality, they could put every currency in there if they wanted to. It's been around since 69, so everybody has a whole lot of it, especially in 2009, they went in and they tested all of the mechanisms for shifting out of the dollar into the SDR or any other currency. And then just recently, they injected a massive amount of SDRs into the global system. Now, you could go to your local postal service and up in the search bar, put SDRs, and you're going to find that they're inside of the system. So in my opinion, this is going to be the next world reserve currency because it makes the most sense. And, I didn't know what it was going to be, but then China in 2009, it was China who came out and said, what about the SDR? And I thought, well, that makes perfect sense. They don't have to reinvent the wheel. They just have to tweak the wheel that is already in place. So they could add every single currency in there and we would end up with a global currency and a local currency.
So yes, I'm going back there talking about an SDR, a global SDR, and possibly adding in cryptocurrencies into this basket. If indeed the US dollar is destined for failure, I know we have central banks trying to prop it up here, but for how long? Now this brings me back to a video I did, guys, about a year ago now, almost a year ago, April 13th, 2022, discussing the Stanford University Hoover Institute and how they commented in a report that Ripple's XRP could be included as part of an SDR. Listen to this. But XRP World also brought this up. I did not know that the Hoover Institute, Stanford University, also mentioned XRP as a possible eSDR, special drawing rights, an electronic version. Imagine what that would do to the price of XRP. And guys, the document is here. I will link this in the description. Digital currencies, the US, China, and the world at a crossroads. Again, from the Hoover Institute at Stanford University. So a very in-depth study here, and again, copyright 2022. So this is brand new within the last 3 months. And I'm just going to isolate this portion here. Again, I will link this in the description, but just to kind of get to my point here, it is possible to envisage even more adventurous arrangements. For instance, a special drawing rights-based stablecoin issued by a multilateral agency, reminiscent of John Maynard Keynes' proposed supranational currency Bancor, which would be exchangeable with any national currency, could thus be convertible into any other national currency in 2 steps via the stablecoin. Now, they're already discussing this inevitability of the value of exchange, being able to exchange value through other means. Well, now we have RippleNet. Such an arrangement would resemble the cross-border payment system that Ripple currently operates with its XRP cryptocurrency, and is just one of the variety of possible alternatives. Any democratic alternative should allow for private sector solutions. Multi-currency corridors, for instance, should not rule out the use of regulated private stablecoins or cryptocurrencies, even though such solutions might require additional regulation, as discussed below. So touching on that fact, discussing an eSDR, we still don't know what would be included. But of course, if the world is to use a cryptocurrency to transfer value, it would only make sense for that cryptocurrency to be part of that said eSDR, or electronic special drawing rights basket. I also probably should mention this 2023 article, so a brand new article, guys. Liquidity is scarce. There's that word again. So banks seek reduced liquidity trapped in Nostro accounts, and mentions Ripple as a challenger to correspondent banking. So here they actually even talk about Ripple. As liquidity becomes an increasingly scarce commodity, banks will seek to reduce their liquidity trapped in clearings and Nostro accounts by rationalizing their clearing and network strategies. And down here they say, we see payers are starting to expect upfront validation of their payments, not only regarding payment data, but also end-to-end fees and FX rates that they can expect. And then they use examples such as SwiftGo for correspondent banking, but also such challengers like Wise and Ripple are also part of this process, or can be, in fact, part of this process. And the link is in here if you guys want to read the full report, which harkens back to this interview, guys. Miguel Viez used to be at Ripple. He's no longer at Ripple anymore. Lender of last resort.
in my mind's eye, there's a possibility where, we end up more of a lending kind of, more of a lender of last resort capacity maybe.
Digital Assets Daily saying if the bank collapsed, ISO 20022 is live. Ripple provides or lends liquidity to global liquidity crisis, and remaining XRP is entirely accessed. Where would XRP be priced with none available? So another good point here, and he also points to some other articles here from the newsbtc.com outlet. U.S. Fed to launch FedNow in July. So would that counter Ripple? But conversely, Ripple also did post this. Federal Reserve Task Force, Ripple improves speed and transparency. So Ripple certainly can be used in this capacity. They could be, offering liquidity even through their line of credit service, lending it out. They could be that lender of last resort. So I wanted to thank Digital Assets Daily here for posting that. So what is going to happen, guys? And where do all these foreign central banks get their foreign currencies to swap for dollars? Going back to this point here, right? We have all these central banks, but where are they going to source their foreign currencies? Advanced test question. Why don't the foreign central banks just sell their reserves? And Santiago Capital saying that's like selling the family silver. We are in a huge predicament here. Ashley Prosper also pointing this out. If XRP is the solution, then first you need a liquidity problem. There's that word again. But not all the small banks, one of the big four. Oh, and guess what? Ripple is actually partnered with Bank of America. Only one has had reports of missing customer money suggesting a potential future liquidity issue. Bank of America is the one. How symbolic is that? Well, conveniently, Bank of America can access Ripple liquidity considering they are a partner. I mean, again, Ripple does not have the clarity in the United States. At least not yet, guys. And from that same Pompliano interview, Raul Pal again, this time talking about Bitcoin price, but we know the rest of the market generally does follow Bitcoin. Listen to this.
General thesis is the market's going to be squeezier than people expect. So I think we probably get to 50,000 faster than most people expect. When that is it this year? Is it within 12 months? Probably. Don't know. And over time, we just keep the adoption curve and it keeps going. Where does it go at the peak of this cycle? I don't know. Again, I don't want to be hung by dicks online for all of this, but over time, does it take it 100,000? Does it take it 250,000? Of course it does. It's just a matter of when. And the timing part is the red herring. If you've got a long enough time horizon and the trend rate of adoption and the rise in the price of the asset over time beats all other assets, you're under no motivation to do anything else but hold.
So we will certainly see 50,000, 100,000, even says $250,000 per BTC. Now the time, that is the red herring. As Raul Pal mentions here, as I throw a Fibonacci here on the chart, we can see another full Fibonacci retracement would bring Bitcoin all the way up to $241,000, give or take, per coin. Sure, there's a lot of work to do before we get there, guys. And the time horizon, that is the big, that is the big question here. How long will it take to get here? Well, I mean, a banking crisis, that could obviously put the fire under the market, especially if people are unsure, lose confidence in the banks. Guys, this is a classic bank run situation. This is why I think, we're starting to see crypto move, but, the bank run FOMO hasn't really occurred yet. This is just speculators, guys getting in early like you and I, realizing that the crap has hit the fan, the writing is on the wall. So you can imagine what'll happen with cryptocurrencies like Bitcoin, XRP, once a bank run really occurs. That's just my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.